The following is a presentation of TFNN. It is now time for The Trader's Edge. Now, Steve Rhodes.
Good morning, money masters and treasure hunters. Welcome to the February 14th. Happy Valentine's Day. Fantastic Friday edition of today's opening bell on The Trader's Edge. I'm your host, Steve Rhodes, and I absolutely treasure your presence here today. My outcome, as always, is to help you to become a better money master and to provide you with the tools that each of us need in order to lead an inspired life. Because leading an inspired life, folks, that's truly what it's all about. So let's go look at one of our tools. You know, this is the tool I call Live an Inspired Life. What's that mean? Well, I love to inspire mostly because I love to be inspired. You know, I say you can't touch someone unless you've been touched. And one of my favorite movie scenes comes from the movie Braveheart. Maybe some of you are familiar with this scene. It's the scene where William Wallace speaks to his army. And I picture that if William Wallace were here today, I could picture him saying to you and I the following. He would say, I see a whole army of men and women here to do good for themselves and others. Traders, investors, young and old, looking for answers to what the market is doing and why. Asking, should I be in or should I be out? Is buy and hold the right strategy? Asking, how do I take action in this market? You know, us against them. Who has the advantage and is now the right time to take action? Maybe it's the market that you have to, maybe it's not the market, folks, that you have to overcome. Maybe it's some other fight that you are talking about or that you are dealing with in your life right now. Do you take it on or do you run from it? Yes, running is easy, at least for a while, and then dying in your bed many years from now. Would you be willing to trade all the days from this day to that for one chance, just one chance to come back to this crossroad in your life, whatever that might be, and tell your enemies both from within and from without that, yes, we may fear them, but they cannot take away our decision to take massive action. Yes, William Wallace, he'd go on to say, yes, I see a whole army of traders and investors here in defiance of prop desks, quant traders, and the like. You know, you have to come to fight as free souls, and free souls, we are. So what will we do with our financial freedom? Will we fight? Yes, fight, and we may die. Run, and we will live as we are, and then dying in our bed many years from now. The question is this: would you be willing to trade all the days from this day to that for just one chance to come back here and tell your enemies that they may take some of our money, but they will never take our financial freedom? And lastly, folks, this is what I would add. I would add, no matter what hurdle is that you will have to overcome, I want you to have this thought process. Because if you knew that everything was going to turn out okay, how would you live your life differently right now, right here, today? What defining decision would you make right now? Folks, you can overcome any hurdle that is in front of you, and guess what? You will. And that is why I say we all need to lead an inspired life. Well, let's go check out, see what kind of inspiration we've got here in the markets right now. A flat market. Dow futures off 2 points. They're trading at 15,973. ES Mini is flat. It's off 50 cents, trading out at 1823.75. Even the NASDAQ is flat out there. That's interesting. It's up a quarter. It's trading out at 36.51. Of course, the big movement in the markets out here this morning, Goldilocks, and how about silver? You know, we have been talking about silver here. We have been talking about that consolidation pattern. Well, it broke it, and that means that the move should be up. Its next move somewhere around the 21.90 level. We know that because it's a consolidation of $2.30, $2.50, somewhere around there. Right now, it's trading up 72 pennies, trading out at 21.15. That's up 3.5%. Gold is up $17. It's trading out at 13.16. You know, quickly taking a look at the gold chart. It's completed the 1-to-1 A to B equals CD on the way up. But as you know, we've been calling for this to move up to at least the next swing point, which is the 1360 level. It's getting into that overbought condition, but it can continue to run higher. Let's go to our first caller. Let's go to Tony in Wellesley, Massachusetts. Tony, thanks for calling. Thanks for holding. How are you this morning?
Hi, Steve. Good morning. Steve?
Good morning. Good morning to you. How you weathering the storm up there?
Well, I don't let the weather bother me. This too shall pass, you know.
It will. Eventually it'll turn to water.
That's right, and it'll be warm, and they'll be cutting the grass, and we'll be enjoying a nice spring. So
there you go. There you go. Now you wanted to take a look at dust, I believe, the direction share bear.
I'd like to enter that sometime because I think this running. I'm looking at the technicals on the on dust, and looks kind of overbought.
Okay. So, what have you traded that before? Have you traded the dust?
Yeah.
You have.
I know how they work and stuff. Yeah.
Yeah. So so it's a real short-term trade that you're looking at, I would expect.
Yeah, maybe up to 30.
Yeah.
Maybe that's
so
too
I guess I can tell you today's not the day. At least today is certainly not the day that I would be taking.
Entry point though.
Well, here's the thought process that I have on that, and that is that gold. If we take a look at gold, because you're taking a look at the mining equities here, and if we were to put the GDX up on my screen and follow gold, we would see how those two things track. You've now gotten gold that is clearly broken out of its descending price channel and its trend line and everything. So it has broken to the upside. So wouldn't it really be better for you to not be shorting something that is so strong, but instead looking for entry points if you're not already, and it sounds like you're not, in long positions inside of the metals market versus trying to fight? Why would you, I'm just, throwing this out here, why would you fight against something that right now is so strong?
Well, I'm looking at my technicals, like it's at the top of the Bollinger Band on a short-term basis. The stochastics are way overbought. The RSI is up there, about 70.
Yes.
So I'm just wondering, maybe we're going to have a short-term pullback in this stuff.
Right. And at some point in time, certainly the market is going to do that, or it's going to move sideways or what have you. It's just I would be looking at not... to me, it's kind of like shorting a stock that's at $14. It has to go out of business for you to make $14. Yet somebody can come in and buy them for $50, and you've just blown your whole fortune out there. And in the case of in the case of the miners, the gold, and so forth, and so what's going to catch the desk of so many traders around the world. Well, look, it's already caught the desks here of traders around the world because you can see how things are trading with regard to gold breaking through its descending price channel. That's a long-term price channel that it broke, and then we've got silver this morning, breaking that consolidation off of the bottom, and that's really what silver needed to do, was to break through that consolidation out here. So if you're asking for where is a good play there, what I would say is I would be paying attention to a 120-minute chart. What is the time frame that you would use? So you're looking at different stochastics
6 months daily.
What's that?
6 months daily on big charts.
Yeah, so I would be looking for some type of trade like that you're looking at. I would suggest that you would go take a look at a 120-minute chart on dust. And if I try to pull something like that up on my screen here, give me a moment here just to find a 120-minute chart here. Let's put in the DUST as the ticker symbol. And that's what, if you're watching on TigerTV, that's what we're taking a look at here. And We're just simply not there yet, unless you're really trying to pick a bottom. I just don't expect that. I would say you want to see the change in trend inside this.
Okay.
And
so
we just
hold off.
Yeah, it's just not a trade I recommend. I would rather say, what we should do here is, Tony, let's take a look at taking a long trade in Nugget or a long trade in the GDX, and let's be trying to identify the areas where that would be pulling back to.
Okay.
Okay.
Very
So
good.
sorry to not give you maybe the answer that you want, but I just got to give you the answer that I see. The answer that I see. All right.
I'm looking for some valuable information. I'm not looking to be appeased. So thank you.
All right.
All the
my
best
pleasure.
To you. Have a nice long weekend.
All righty. You do the same, and thanks so much for calling. That was Tony in Wellesley, Massachusetts, and. Folks, if we just simply take a look at what silver has done here. Now, this is just the blue line that's on my screen. This is just simply a shorter-term trend line that's out here, and I may not have it exactly drawn. I mean, we can come up with a couple areas, but the bigger trend line here is this price channel off of the highs here from silver back in April of 2011. That is a big descending price channel. So I guess, Tony, to answer your question a little bit further, when silver gets up to the top of that price channel, which is somewhere right around the $21.90 level, that's probably where you may see silver take a little bit of a rest there. But boy, if it breaks that price channel, folks, that's just one more indication that the metals are off of the bottom out here. And it doesn't really matter, what the U.S. dollar index is doing. That correlation, just be paying attention to the chart on the actual metals out here. Silver at this point should run up into the 21.90-ish range, which is going to run. That's basically your measured move. So the consolidation pattern, if you're watching this on Tiger TV, you're taking a look at the yellow box on the screen out here. So you can see that's the measured move that I've got out there. That takes you to about the 1 to 1.618. A to B equals CD, and that price projection around the 22.12, 21.90, somewhere right around there. You can see a nice wide-ranging bar here this morning. It's a small A to B equals CD. In fact, we can also take a look at some retracement levels here on silver. Let's do that. Let's come off of the last swing point. That's from October the 31st out here down to the low that was put in on December 31st. And you can see that it should at least make it up to the 0.618 level. If I get rid of this A to B equals CD pattern, that might make it easier for you to actually see that on the screen here. So now you can see I've removed the A to B equals CD, the 0.618 level, 21.44. Price is coming into it with a wide-ranging bar. Markets don't end on wide-ranging bars like that. 877-927-6648. Light sweet crude back 63 cents. Natural gas up another 2 pennies. We'll be right back, folks.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow futures off about 14. ES mini down a couple of points right now. And I want to go back. Let's stay on the gold miners here just for a moment, just so we can, we're coming to the week's end out here. Let's take a look at what it is that we are looking at now on the screen. If you're watching us on TigerTV, look, if you're listening on your radio or your mobile device at TFNN.mobi. Thank you so much for doing that. Remember, you can catch the live stream of the show by going to the homepage of TFNN.com. Upper right-hand side, you'll see a button, 3 little smartphone devices on that. Click on that. The show streams live, and, of course, the archive is on Channel 9. Now, the top portion of my screen, I'm showing the charts here. They include the Rhodes momentum indicators, the signals out here. The top portion is the weekly chart. The bottom portion is the daily chart. Now, that red line going across the bottom portion of the screen, that's your 200-day exponential moving average. That's a level that's going to be attacked here this morning. In fact, we're going to see the XAU as the market opens trade above that level. Now, what I'm going to do here, I'm going to actually just switch. Let me just switch over to we'll take and what I guess the point that I want to make here. Here's what I want to do, so you can see this on multiple time frames. With regard to the daily chart, if you look close enough, what you can see here, and this is, let me get my crosshair out here on the daily chart. Ever since the time frame here of December 27th, these little red boxes that show up on my screen, they tell you whether it's buying pressure or selling pressure. Who's in control, the buyers or the sellers, the bulls or the bears? In this case here, when you see red boxes, see, the markets work like your heartbeat. That's all this. What this tool is doing, it's really trying to catch. It's interpreting the heartbeat of the market. And it's doing that by taking a look at an EKG. So I've got my own internal EKG system that is built here. And the way that your heart beats, it's like a sine wave, goes from up to down, up to down, up to down in a normal range here. What I look for is I look for areas outside of the normal range to help me really understand what's going on at the extremes. Is it buyers or sellers that are truly in control here? And ever since December 27th, that's when things actually changed inside of the XAU, and it has been consistent ever since that time frame. You don't see one of these green little boxes here. So on a daily time frame, this tells us that this has been buyers in control, in control, in control, in control, and that still is the case out here. Inside of the weekly chart out here, we've seen a nice bullish crossover. That, quite frankly, taking place here this week, maybe towards the end of last week, the week of February 7th out there. And so the change in trend has changed significantly. And that's why I suggest to Tony and everybody else that what you really should be doing here is you should be looking for places to enter trades. Now, I'm going to put up, I've got a scanner, a market analyzer that I have created as well. This is for everything inside of the GDX. Now, I'm just looking at the time period here of just the now this is not every single holding with inside of the GDX, because there are some, there's a holding from Egypt, there's a couple from Canada, what have you, and I don't have that feed, not paying for that feed to update this chart here. But this is all of the U.S., all of the stocks that are traded on the U.S. exchanges out here. And these, so they represent the GDX. And this is taking a look at the weekly time frame, daily time frame, and the 120-minute time frame out here. You can see on the 120-minute time frame, well, for what this tells me is that the bulls are in control of 100%, because I don't think I have this is 100% of the stocks that are inside here. If I wanted just to take a look at what is the most bullish from a momentum standpoint, I would just do this. And this tells me that on all three time frames out here, the most bullish happens to be AUQ, BTG, EGO, Eldorado Gold, GFI, Gold, Randgold Resources, Harmony, Newmont, and NGD out there. But that is where you've got consistency with regard to weekly bullish trends on a weekly, on a daily, and on a 120-minute time frame out here. If I take this off of the list out here, and this gives us everything on the 120-minute time frame, and even on the daily, only two potentially bearish, which would be Alamos Gold. That's just really going through a retracement. And Newmont Mining also just really going through a retracement out here. So with something so strong, it's just not anything that I would recommend to you or anybody else in trying to take a short position here. It's just not with inside the dust, with inside the NUGT. This helps you to understand the actual strength inside of the marketplace. So enough for that. I know you want to see what else is going on inside of the market, so let's take a tour around. Let's take a look at what's going on inside the currency pairs out here. This is the thing to be most cautious of, is we've got the Euro Japanese yen here. It's made the 0.382 retracement. That's coming off of the high out here from December 27th down to a low where it did get into that oversold condition. Doing that, getting down to a low on February 4th. It's only made the 0.382 retracement. This currency pair has not been going along for the ride out here. It has not been going along for the ride. And it just says caution. It absolutely says caution. 877-927-6648. We'll be right back, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com. Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technimental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technimental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And we're off to the races. We got the Dow off 35 points. Trade out at 15,992. S&P down 3 at 1827. Composite down 5. Trading out at 4235. Russell 2000 flat out here. Apple pretty much unchanged. Microsoft down 14 cents. Leading the charge to the upside, Log Main Inc. Not sure if that's really the proper pronunciation. LOGM is the ticker symbol. They're up 23% here this morning. They have Log Me In. No, thank you. There we go. Log Me In. How about that? That is up, let's see, they had a net loss of 459,000. I don't see the, come on, why is my system doing this to me? I don't like when it does that. In any event, revenues, looks like that a revenue increase of 22% to about $45 million from $37 million from the prior year. So they're leading the charge to the upside. You've got, let me see something other than a pro share or direction share. Let's see. Occidental Petroleum, OXY is the ticker symbol. They're up 3.5%, trading out at 333. We've got Cray, the the computer company out there, trading up 11%, up $3.44. TRW Automotive up 393. J2 Global, JCOM is a ticker symbol. They're up 6% here this morning. Leading the charge to the downside, losing a little bit of weight. This morning is Weight Watchers. WTW is a ticker symbol, off 26%, getting hammered. That's after showing net income of $30 million versus $58 million from the prior quarter, fourth quarter, and in revenues of $366 versus $411 out there. GNC Holdings down 10%. They're off $5 and change. Google down $4 and change out here. Trulia Inc. off about $5, down 13%. Stamps.com down 10% out here. They had net income of $18 million versus $9 million, so a nice bottom line beat out there. Revenue top line $32 million versus $30, so they're growing, but they're getting hammered here this morning. Now, I had a request to take a look at Amazon from one of our listeners out here, so let's take a look at Amazon. I believe the question was... Actually, I have to pull up the email to see what the question was out here. Let me make sure I get the answer the question. The listener originally had a short position in the stock and was looking at the chart, sees it's bouncing off of a 6.18 out of a short position, wondering if Amazon is just retracing, and a possible short. So let's go take a look at Amazon. So the viewer taking a look at a possible short inside of Amazon. Let's go see what it has done compared to the market out here. So we got AMZN as the ticker symbol right now. It's trading out at $357. If we take a look at Amazon versus the rest of the market, you can see here the rest of the market has made much larger retracement out here, even the weakest elements coming off of the highs. And that's a January 22nd high out here for Amazon when it was priced at 408.06, all the way down to the low that was put in here on February 5th. Out at price point of $337.73. Now, as Amazon was pushing down into that low, it was doing it with 4.4 million shares, going into a little swing point, a little breakout area that had 4.2 million shares. So 4.2 versus 4.4. But the real breakout that it was really going into is this volume bar right here from October 25th. That's the real breakout, so 12 million. So it does not have enough just yet to break through that supply line. And so it makes sense that it held as a support level out here. Now, what Amazon did have is it had a big downdraft session of 16 million shares on January 31st. So that was a sign of institutional selling. And Amazon is either going to be in a consolidation pattern because we've got a gap up with pretty good volume as well as a gap down with volume out here. And that says that this could easily consolidate between the 330 and change level and, at least the top of this gap out here, which was from January 31st around the 375.45 area. Now, to show you just how weak it actually is, it's only been able to make that dead cat bounce at 0.382 retracement. If you go from the high, as I mentioned, on January 22nd down to the low here on February 5th, the 0.382 retracement is 364.60. That's what it hit on February the 10th out here. But it has not really participated, period, with regard to the bounce that we have seen inside of the market, bounce or potentially even more than that out there. So Amazon most certainly looks weak out here. The question is to where is it that you would maybe take a look at a short position? I would have to say you'd want to go ahead and take a look at that. Probably if it were able to get up to the top and see if this resistance line on January 31st high of 375.45 were to hold out there. And that's what I would be looking at for Amazon. I had a request to also take a look at Priceline from a listener out here. If we take a look at Priceline's action, what it has done so far, it's trading out at 1281.89. Now, Priceline, I had a consolidation. It went ahead and it broke that consolidation and made that measured move, and that was taking us all the way down. That's so if we kind of correlate this to silver out here, if we take a look at this measured move, this little consolidation pattern inside of Priceline, so you can see how these things work here. Now, Priceline broke through that level. And it did that here about January 29th or so, very close to making that measured move as it made that little doji candle back here on February 5th. Now what Priceline has done, it's made the 1.618 expansion of its last set of swing points out here. We take a look at what this is doing on a weekly basis. So the question is, can it move higher? Yeah, of course it can. But right now what it has done is made the 1.618 expansion of its last set of swing points out here. Let's take a look at what Priceline is doing on a weekly basis. I mean, this has just been the rocket ship of rocket ships. It was... you got to figure that Priceline was loving all the attention that Apple was getting as it was just kind of, because if you take a look at both stocks, well, actually, Amazon, if you go back to November 2008, I think Apple was in about the 75-ish range, 60 to 75-ish range. And the reason I know that is because I was taking long positions in Apple back then. In the case here of Priceline, this went from the lows back here at $46, $47 in the same time frame, November of 2008. Now it's at $12.70 out here. Just a strong-looking stock chart. There's nothing bearish if we take a look at Priceline.com on a weekly basis out here. A question in the den here about the SPY being a lasting engulfing candle out here. So let's go take a look at the SPYs here from yesterday. We take a look at the SPY. The SPY, the prior day, so we got for a lasting engulfing, we've got to take a look at a couple different candle sessions. The first one here that we'll be looking at is December the 12th. You did have a down close. You had a red-bodied candle. So that is the first qualifier that you need to have out here. We then had yesterday where the SPYs go ahead and they open up lower. That's your next qualifier you like to see on a lasting engulfing candle. Number one, you want to see an open below the body of the prior session, but preferably below the entire candle session. You want to make this thing struggle as much as you possibly can. In this case here, we had it. And you want to see it close. You want to see it completely engulf the prior session, and that refers to the close out here. And that's what we saw. This actually did close up at 183, so this completely engulfed it. Most people would consider this to be a very bullish pattern. The Japanese call it a lover's suicide, double lover's suicide out here. And all that's needed today in order for the SPY to confirm a lasting engulfing candle is a close below yesterday's close, which is 183.01. Right now you're trading at 182.77 out there, and the SPY had that. The S&P 500 had that. Unfortunately, the other indexes did not. The diamonds did not have a lasting engulfing candle, and the reason being is that they did not get over and close above the 212.14 high, and that would have been at the 160.45 level. Yesterday's close was at 160.29, and yes, 20 cents does make a difference when you're taking a look at candlestick patterns inside of the marketplace. Let's go take a look at what's going on inside of the currency world out here. Let's take a look at what's happening inside of the euro, U.S. dollar. Right now, we're going to pull up the weekly chart. You know, we've been paying attention to this. You've got the euro hitting its head against this descending channel line out here. This takes us back into the 2008 time frame. We can see the euro being in a very strong descending price channel, and has been trying to break out of that price channel ever since October of 2013. And so, to me, I think right now trying to trade the euro becomes pretty difficult until we see a breakout or breakdown one way or the other out here. The trading range is just getting very, very, very narrow out here. Now, of course, the currency pair that we do want to be focused on is the Great British Pound, U.S. dollar, because this one now looks like we have a real break. And this is going to be a very large break. In fact, right now you got the pound, U.S. dollar trading out at 167.13. It's actually trying to get up over, quite frankly, its last hurdle of resistance out here, and that is going to be the trading session from April 29, 2011. That high is 1.6745. Now, what we're seeing here today, unless we see a huge sell-off, is we are seeing an area of resistance that has been, this is a weekly chart that we're looking at inside of the Great British Pound. This is an area of resistance that has basically been in place since January 22nd, 2010. There's really a couple different ways that we're going to look at this chart here with regard to the message and what it will give to us. Now, that is held as resistance. The first time that resistance level was broken, it was pierced on April 22nd, 2011. Then we saw a close above that level on April 29, 2011. It immediately gave it up the following week. A big bearish engulfing candle. When it got back inside that part of the range, it went ahead and it made its move of a move, 100% move of a move, coming all the way back to the prior swing point low, which was in December of 2010. At this stage here for today, for this week, it looks like we now have a real break inside of the Great British Pound U.S. dollar for a period of 1, 2, 3, 4, 5, 6, 7. So for a period of more than 7, really, you're 1, 2, 3, 4, 5, 6, 7, 8. For the last 9 weeks, 10 weeks out here, last 2.5 months, the Great British Pound has been trying to break through this level. And I would have to say that it has today. So that means what you should be looking for is you should be looking on an intraday chart. You should be looking for retracements of this pattern. Let's go take a look at a daily chart. I don't take any chances of this chart getting blown away here. So let me just put the Great British Pound, GBP. If I can type here, /USD and a little plus sign, that'll go ahead and pull up my daily chart out here, and we can pay attention to the daily chart. Now, in the daily chart, this did have it had a failed pattern here, which was a 0.786 Gartley, which I always tell you when those things fail, they turn into butterfly patterns out here. Let's take a look at where that 1.272 butterfly will take us to. So it says a Great British Pound. It's really almost completing that today. 167.57 would be the number out here inside the Great British Pound. Now let's take a look. I do see what looks like possibly a 3 drive to a top pattern. So this is actually very cool in that we are seeing that pattern, what looks like play out as well. And now you may not have the same tool that I've got on my system, so no problem. But you can do the same things by just taking a look at expansion tools. That's really all that a 3-drive is. You're looking at 3 expansions. So the first expansion, I'm using the swing point from January 2nd, 2014. I'm going to go from that high down to the swing low that came in here on January 17th out here, down to the price point of 163.08. Now, I'm just going to get rid of the retracements. We'll just take a look at expansions here momentarily. What we can see is, of those 2 sets of swing points here, the 1.272 expansion on that was 1.6683. It actually got up to 1.6667. Close enough for our work, a 1.272 expansion. Your second expansion out here is the one that we're taking a look at today, and that's going from the swing point high of on January 24th, from 1.667, of course you knew that already, down to the low put in on February 5th out here. And so that 1.272 expansion would actually take us up to about 167.81. So that's the expansion that we would be looking at. Now I want to take a look at one other tool here, and this is just a cycle pattern. So I want to see, because you like to have these 3 drive to a top patterns, you want to see them have the same type of cycle. That says that today, no, it doesn't say today. It says that on Monday, Sunday night, Monday, is when this pattern here could complete. Could also complete today. But see, what I'm using is I'm using the exact same time frame. I'm going from January 2nd. We're using trading sessions, not calendar days. So from January 2nd to January 24th, and it shows that our next time frame when this would meet equally on time as well as price, because we're going to draw that price pattern in, where you'd have a 3 drive to a top pattern complete at 167.81. So why is it that Steve-O says, boy, isn't that cool? Because we have a weekly chart that we know for a period of 2.5 months it's been trying to break out of, and it clearly is doing that as we speak here today, unless there's some huge sell-off. Now, a 3 drive to a top pattern, or 3 drive to a bottom pattern, just depends on which one you're looking at. 3 drive to a top would be one of your more bearish patterns out here. I'll go ahead now, actually, we'll draw it in so that we'll continue to pay attention to this. We'll actually draw it in on the day. This is what it would actually look like out here, as we put in here. Now, what's nice about this pattern, 2 different things. Well, several things. Number one, we have two 1.272 butterfly expansions. You also have from the original first drive out here, meaning from the January 2nd high to the low that was put in on January 17th, we also have a 1.618 expansion that is taking place out there. So we got a lot of great Fibonacci numbers coming together. So the reason why I think this is so great is because if this pattern here fails, that just tells us how strong the move inside of the Great British Pound US dollar would be. Now the other side of this is you don't really need to chase this currency pair here. This pattern ought to work and at least pull back and give you an entry point into a long position inside the Great British Pound. And then you'll know when price gets taken out at these highs here that it's off to the races. 877-927-6648. Be right back, folks.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foresight Fund Services, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
The Bull Bear Binary Option Hour, sponsored by Nadex. Up next on TFNN.
Welcome back, folks. Relatively flat market out here. Dow's up 77 cents. S&P is off 45 cents. Composite down 7 points out here. Let's take a look at some of these stocks that are popping and dropping in the marketplace out here. We've got Log Me In, LOGM is the ticker symbol. That is up 25%. So LOGM is the ticker symbol. Let's go take a look at this, and up with some really nice volume out here. Let me get rid of the Tom DeMark indicators out here on the screen. So this thing is, let's put this on a weekly basis. It might be a little bit easier for us to look at it, see what it's trading into. So nice wide-ranging bar heading up into this high volume high out here. So that's what it's trading into right now. Looks like Log Me In is on its way up to about the 49.50 level. It's trading at 41.76. Now, it's going to be, well, I don't know what it will be like at the end of the day. It's trading, that swing point had 5 million shares. Through yesterday, this did about 1 million shares. Let me see what it's doing here today. What kind of volume do we have here? So far, about 1 million shares. So maybe they'll pick up some steam, but it's inside that swing point on the weekly basis with this gap up here with nice volume. Looks like to me that is where it wants to trade into. Even on the, what it is testing right here right now on the daily chart, though, is this high volume high. This is probably the same one, right? 49.50, yeah. So it's trading into it. On the daily chart there, 3.9 million shares. The low is 41.94. Let's draw a line across the bottom of the screen out here. So if you happen to be in this equity, what you want to see it do today is to close above that line. You'd like to see it do that. Look, even if it doesn't do that, it's telling you it'll be back there because you're coming into that swing point with volume, that high volume high. And that low is 41.94. You'd prefer to see it close inside 41.94 with volume. Right now, it's tested that level, and some folks have taken, some folks maybe that rode it all the way down are just getting some of their money back. But it looks to me like it's going to get up and test the 49.50 level. That's probably where somebody might want to take a look at taking some money off the table, and that is on Log Me In, LOGM is the ticker symbol. Let's go take a look at Cray, CRAY, see what's going on there. That's up a nice 20% out here. Let's go see what Cray is doing. Had a really nice sign of strength here recently. Let me get rid of these tools out here. Looks like I looked at Cray from some time in the past. Cray here had a nice sign of strength. Did it on January 7th, up with 1.9 million shares. Gapping up today as well. Another sign of strength, only 26 minutes of trading and already up with 500,000 shares. Had another sign of strength all the way back here on August 1st. Boy, that had 1.2 million shares. Lots of signs of strength. No real signs of weakness inside of Cray out here. As far as where this may be headed to, if we take a look at weekly A to B equals CD patterns out here, I would have to go all the way back to the large one that's in play. That large one would take us back. I'll just use it off of the April 13, 2012 time frame. That's your A point, your B point up here on April the 5th, only about a 0.382 retracement. You're above your 1-to-1. This thing is headed to 37.98, then maybe 43.80, and that is on Cray, CRAW. Let's take a look here at Weight Watchers. Weight Watchers having some problems this morning. WTW is its ticker symbol. If I can type properly, I would be able to help you out here. WTW. Apparently my fingers need some Weight Watchers tools. So if we take a look at Weight Watchers, this is not the first sign of weakness. In fact, this has had nothing but signs of weakness here as of late. Let's take this back here. First sign of weakness, most recent sign of weakness, that took place right here. That is some big institutional selling. That's on May 3rd, 2012. So we're in February of 2013. Oh, my goodness, time flies. Hey, folks, thanks so much for being here. Have a great weekend. We'll see you on Tuesday. Have a happy Valentine's Day to each and every one of you out there. I look forward to seeing you early Tuesday morning. Take care, folks. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com. Eastern legend tells of a fair maiden who was offered a rare gift by the king of the land, a bag of pearls. The king promised that she could keep the largest, most perfect pearl she could find with these 3 conditions. 1, choose only 1 pearl. 2, remove 1 pearl at a time, accept or reject it. And 3, if rejected, it would be lost forever. She began by looking at the pearls, passing on many special treasures. She delved deeper into the bag, and soon the pearls were replaced with pebbles. Sadly, she went home empty-handed. Folks, replace pearls with time, because we cannot go back even 2 seconds. We live in the eternal moment of now. So when now are you going to take advantage of my offer to you, a subscription to my daily investment newsletter service, Mastering Probability, where you can experience the most incredible pearls for trading and investing, the Rhodes Momentum Indicator and Strategy. The offer? It gets better. A 30-day money-back guarantee. Don't go home empty-handed. Mastering Probability. Available on the homepage of TFNN.com.
You're watching Tiger TV.